Well, we've owned Amazon for a long period of time, really since when the stock was $250, $270 versus where it is now at about close to 1,000. There are two or three reasons why we've exited the position. You may have heard me, talking, in glowing terms about Amazon in the past, and I still love the business model. I still love what's going on with the company. I think they continue to innovate at a very fast pace. I'm very excited about what they're doing with Alexa in terms of their virtual assistant, what is happening with Amazon Go, how they're changing the paradigm in retail. So there's a lot of interesting things going on with the company. As I've talked about in the past, we've always used a cash flow valuation measure to understand how to value a stock like Amazon, because it really doesn't work on P's and price to books, because it's always been investing so much. And so what we've always looked for is whether Amazon has the opportunity to use the cash that it's generating in its current business to reinvest in other growing businesses at similar or higher rates of return. So we like the fact that they have growth opportunities in India. We like the fact that they can grow in Europe, use the same model in the US, and continue to grow. Recently, however, with the acquisition of Whole Foods, Amazon has signaled to the market in some ways, at least in our understanding, that they need to be a lot more conscious about growth from the perspective that they now need physical presence to grow to the next level. So when they want to do your groceries, give you the lobsters and the strawberries and the bananas and the potatoes at the right place at the right time, they need to be closer to you. So that retail presence becomes a lot more important. Those supply chains of where to source those lobsters and the crabs and the fish become a lot more important. And that's a very difficult business. Walmart, which is a $250 billion corporation, has been doing it for ages. And the return on invested capital in those businesses is very thin. Yet the leap of faith that the market is making, and if there is any company that can make a success of it, it is probably Amazon. But the leap of faith and the way the valuations are structured, we are already ascribing full success to Amazon in its physical retail foray without actually having seen any execution. And that worries me because, as an investor, I like margin of safeties. And at this point of time, we are already assuming full success. So that's kind of issue number one. Issue number two is, just the size of the corporation, how it's impacting different sectors, what it is doing to jobs in retail, for example, which is one of the biggest employers in the US, caused me to think that government regulation is not far behind. The politicians will find a way to regulate because labor is complaining about what Amazon is doing and disrupting. That doesn't mean that the pace of disruption will be stopped, but it means that there will be more regulatory oversight of what Amazon is doing.